Welcome back to the channel, everyone, and thank you for tuning in to another great video. Today, I want to talk to you if you're someone that's really looking to quit your job. You're in the process of thinking about resigning from your profession or career, all right? Maybe you are working a 9-to-5 job or some shift level job, and you're reaching that time of your life where you're ready to retire or have a career change in life, all right? So you're ready to start a new journey to open up the door and look for something else different to do with your life or in your life, okay? And I know a lot about that. You get burnt out in time. Like I said this before, especially when we get into our, mid-age in our life or somewhere in our 40s. Most people tend to have a change of life or change of venue or change of career. So let's talk about that today. Trading to me is one of the most inspiring and one of the true accomplishments in my life, I'll say, okay? I love to trade. It's a new adventure every day that I wake up because I'm always trying to piece together what the market is trying to do. And I love trading the markets. I love trying to outbeat the competition and making profit, making money on a daily, okay? This is what I do full time for a living. Yes, I do this. This is my 9-to-5 job, all right? So, and how do I do it? I am a supply and demand style trader. Now, the thing about it is that you must understand institutional market structure or institutional order flow. You have to understand what the big players in the market are always trying to accomplish and do. You want to be moving like them and not against them. If you try to railroad the institutions, you will get flattened out. You will get railroaded because they have the big money, okay? They carry the big wads of cash and the big bags that allow them to push and pull the market. So they are the gravitational force in the market, and we want to trade with that force, okay? And not against it. All right, so let's talk about supply and demand, and I'm going to take a look at yesterday and maybe even the prior day. I want to show you the strategy that has allowed me, all right, to move forward, have a change of life, be able to create and have my own journey, being able to open up my own door. Yes, for me, it allowed me to go from a 9-to-5 job to being my own boss on the daily, all right? So I don't have to worry about, someone telling me what I need to do, how I need to do it. At the end of the day, I do it in my own time, and it is very, very rewarding, okay? So, maybe you're someone that really hates your job. You are, just very upset. You're very just frustrated. You can't take on any more than you're already taking on, and, they keep pushing that envelope towards you with more and more, filled with more and more stuff that you just feel as if, like, hey, this is enough. I need to find something that I love to do. Trading to me is not only an outlet, but it's one of the best things I've ever picked up in my life, and I'll never put it down. I'll say it just as simple as that. Now, it's not for everyone, okay? But without further ado, let me go ahead and stop rambling on. Let's talk about the strategy. Supply and demand. If you do not understand what it is, then please take the time to research and study. Learn, okay? All right? No one's going to spoon feed you this information. Okay, and hold your hand. You have to put in the due diligence and do your own homework, okay, to get you to a point to where you become profitable. It took me years. You ask most people, most professional traders today, they will say the same probably. It took them years. So, let's talk about the supply and demand strategy and how it has helped me and benefit me and transform my life now to a long-lasting, very lucrative career that I'm in today, all right? As well as I want to give you some tips, some pointers that would help you out in trading supply or demand zones as well, okay? So when we get back to those areas, what can we look for? For, number one, rejection, how to look at it, and knowing when to get into a trade or maybe not get into a trade, all right? You have to know, all right? And as well as, looking at the possibilities of which zones maybe carry higher probability when looking to get into a position, all right? So first and foremost, let's take a look at the higher time frame chart. For me, it's a 60 range chart. Maybe it is a 60-minute chart for you, or a higher time frame, maybe a 4-hour chart. Now, I typically don't look at anything higher than the, for me, the 60 range chart or a daily chart. Okay, I will from time to time. I do look at the daily chart, but when I'm intraday trading, I'm looking at my 60 range and my 12 range chart, which is my entry chart. Now, looking at my higher time frame chart, as we can see, what do we see going on here? We see the market doing what? It's making moves to the downside, selling off, which means we're doing what? Making lower lows and lower highs, trending to the downside. So overall, the directional bias should be looking for opportunities to go short. Now, I'm not saying that you always have to take a short, and sometimes, the higher time or the lower time frame may not pair or match up with your higher time frame, and you may look for opportunities to go long. So, but it comes with experience, all right? So let's say during the current session, say the NY session, the market we have a bullish direction, but the overall direction on the higher time frame is short, okay? Meaning we should be looking for shorts, but the intraday New York session is showing us or giving us a vibe that the market is doing what? It's in a bullish direction. We can look for long positions at areas where price pulls back to key areas of demand, okay? But just keep in mind also to keep your eye on the higher time frame. And even if you take a long position because of the bullish direction on the lower time frame, make sure that that's a short-term area and knowing where to get out at and looking at your higher time frame as well as your lower time frame. Because, again, we do not want to carry through for a long period of time trading long when the overall direction of the higher time frame is what? Short, trending to the downside. Now, I'm scaling down. I've already saw that the higher time frame is moving to the downside, okay? But when I'm looking here, this is yesterday's trading session, yesterday's New York trading session, okay? When I'm looking here, all right, I see that we are making a bullish stance to the upside. Now, even on the lower time frame, if we look several days out, we're doing what? We're moving to the downside, but during the current session, we are bullish within the current New York trading session, okay? Keep in mind. Now, so yesterday, I saw a few opportunities to take some long positions, okay? Now, most people ask me about or have stated or may not know what is the open range gap. All right, maybe this is something you want to write down, okay? And some people may not trade it, some people may, but if this chart right here, okay, I have a 12 range chart, which is an ETH, which stands for electronic trading hour, okay? And then this chart here is an RTH. This is a regular trading hour session chart, okay? Which means that it's just picking up from the time stance when the NY session opens up to the close of it, okay? Which is typically from 9:30, okay? And then again, it closes right there at 5 o'clock p.m. Eastern time, okay? So, the close of the prior day session to the open of the new session, there will probably be a gap. And if there is a gap, again, from the prior day close to the opening of a new day session, the NY session, then that's what we call the open range gap. ORG. Open range gap. All right. So hopefully you guys got that. So in the session yesterday, all right, I started seeing price do what? It made a low right here, okay, at 43.93 and 3/4, okay? Then it starts to shift to the upside, all right, taking out the session highs, and we get a market structure shift to the upside. So at that point, I'm kind of, from the intraday standpoint, my mindset is bullish, even though the longer time frame is showing me that we're bearish. And I can look for opportunities to take long positions if we get the market retraces back to a key area of demand. All right. Again, I'm not looking to take it or carry it through for a long period of time. But when I saw this right here, you can do something like this. Lots of times if you get a nice setup, so where the market may break higher, take out the session highs, and you get a market structure shift where the market may pull back, you may want to take a long position to do what? To take it back to fill that open range gap area. Now, in this case here, what happened, the market pushed up, it made a low here, pushed up, took out the session high, started forming a market structure shift right here, but it blasted right to the upside, creating this area of demand. So it didn't give us an immediate pullback, okay, to get into a trade, to go long, to fill in the gap right here, all right? Would have been a beautiful opportunity if it did, but that's okay. It pushed with aggressive force to the upside, lots of buying, which created this demand zone, all right? Then it pulled back and it pushed higher, creating another demand zone right here. Now, there's two areas of demand here, and I'm going to explain this X right here where this blue box is at, okay? What happens when the market pushed higher, I had this box here marked because of it was a demand zone, all right? Below it, another demand zone. But one thing you want to keep in mind, I always talk about, I like to take trades from fresh areas of demand, okay, where there is an imbalance, meaning the market has not immediately pulled right back to it and tested that zone, all right? It didn't test it here, and it didn't test it here. See where it pulled back? Didn't test the zone, pushed up, pulled back, pushed higher, creating a new high for the current day session. Didn't immediately pull back, okay? So we have two fresh untested zones where there is imbalances at, okay? Or a gap pretty much, okay? All right? So when I see things like that, I have to start weighing my probabilities of, okay, which one should I take? Now, I'm not afraid to take this one here even though we are up higher, okay? But the better opportunity is going to be here because, look, when I'm looking here, I say, okay, we have another one below it. Typically, the market may try to come down, break through this zone here, and test the one below it. Why? Because there's liquidity resting right here. So it may want to come down, take out that area of liquidity right here at 44.03.5, and then test that zone. And that's exactly what it did in yesterday's session. Now, the best times for me that I see to trade typically is anywhere prior to the market opening up. So typically 8-ish, 8:30-ish, maybe even 7:30-ish. It doesn't really matter, you know, pre-session. But typically by 11 o'clock is where I kind of want to get out of the market, you know, because we're starting to approach that lunchtime hour as well as volume starts to slow down. So you have to think about what's kind of going on, you know, when it comes to trading on the trading floor as well. You know, big players putting on positions. Lots of, you know, what we classify as market makers, if you want to say that. The big players in the market that are injecting or putting money into the market, okay, to fulfill trades, they're taking lunch, okay? So during that time, the market starts to slow down, all right? And then it may start picking back up sometime later on, you know, typically around 2 o'clock, you say, okay? You may get another rush or another surge between 2 and 3. I typically don't like to really trade so much during 3 or 4 unless I see a real good setup that I can't resist. But 9 times out of 10, from maybe 8:30 to 11 o'clock is probably the best time to really trade. In my case, okay, that's what I see, you know, and back testing and just looking at things with years of experience. Okay, so following through what the trade, okay, price comes down. I'm ready at this area because of, I told you, it's still classified as a high probability zone because we have an imbalance. It is an area of demand where there's aggressive buying. The market pulls back to it. Now, what I want to see if price was to get in this zone here, those that have been following the channel, you know part of my rule in my process of looking for, my trading strategy is to what? Is to look for a close of a candle or a rejection at the zone, close of a candle in the opposite direction. We didn't get it here. Price broke right through, okay? It broke right through. Now I'm going to show you something today which may also help you out in your own trading as well. It's something I take a look at and I kind of pay close attention to once price gets to the zone. And, you know, even though we may get to what I'm trying to say, the rejection, something else prior to that I kind of like to see as well, okay? And I talked about this before in several videos. Now, being that price broke to this zone here, okay? All right? I went ahead and marked it with an X, all right? It's no longer valid. We broke through it, right? Okay? And I want to say this. you see the body of this last red down candle where I had where I marked up or mocked up the zone. If price comes through this area, comes down to the body of this candle, that red candle right there, that hammer candle, that candle to the downside, that last red candle to the downside, and it breaks through or closes below the halfway point, if you want to call it that, all right, of that bearish candle there, then I'm not looking for an opportunity to go long, guys, in most instances, okay? Because it closed below or within the body of that candle. So basically, it closed within the zone, okay? All right? Or the halfway point of that zone, As well as, take a look what happened. When price did that, it continued pushing lower. Now it comes down to this demand zone right here. Now, the ones that I have marked up red are the ones that are, would have been great trade setups to take trades from. All right? Now, take a look. We tap into the zone right here. Okay? All right? Again, if you don't know much about demand zone, aggressive buying to the upside. All right? So, price comes down to this area. Okay? And if you look at the body of, just say the zone that I have marked right here. Okay? That I have marked. I tend to look and see if we are going to close within the zone, or we're going to come to the zone and reject it with a wick and push, and take off to the upside. Okay, so what happens right here? Let me show you. Price comes into it. We do close within the zone. Okay, now I prefer again to see the market come into the zone and not close within the zone, but wick out that area and then turn around with the bullish candle to the upside to go long. Now, sometimes you get you'll get instances where the market will come down into the area of the demand zone. All right, tap into it, close, and then the next candle will wick the area like it did right here. Okay, we get a nice bullish candle and take it to the upside. Now I'm going to show you what I do in instances like that as well. This is a valid demand zone. Okay, it didn't break through it. It came down to it, closed within the demand zone, get a nice bullish candle to the upside, okay? It pulls back, breaks higher. So what is that setting up? That's setting up a market structure shift. Then you can wait for a pullback, okay, to the area, all right, where it created a swing pretty much, which created a market structure shift. Come back to the area, all right? Now we see where it comes down to it. Okay, and then we get a close of a candle back to the upside, you go long. All right, that's one thing you can look for. Or you can wait for prices to come to it like most times what I do. Even though we got the close right here into the zone, you can wait for a full break of a candle in the opposite direction if you tend to want to, like I do most times, which could be, we got a candle here to the downside, it pushes up, doesn't take this candle here, we get another pullback right here. I'm typically going to go long right here at 44.02, or you can simply wait to go long here at 44.05. But if you do that, guys, look what happens here. It's going to pull back, and most times it will pull back. How far does it pull back? It pulls back about 5 points before it goes back in that direction off of the 12-range chart. So, if you do not get the first close of a candle to the upside, all right, as a means of rejection, okay, then wait for some means of or a market structure shift to the upside. Like it pushed up, pulled back, broke higher, then wait for the pullback to the area where the market shifted right here, okay, meaning that it started pushing to the upside, and then wait for a close of a candle to the upside to go long. All right, so what that does, it gives you more confluence. It gives you a second opportunity to get into a trade, and it gives you a second stance of means of rejection as well at a market structure shift at a demand zone. Okay, so you get multiple means of confirmation there: the demand zone, rejection, market structure shift, pullback, rejection, close of a candle in the opposite direction. Boom, go long. Where are you going to go long to? Back up to liquidity. First contract here, or first couple contracts right here, and then take off and aim for the top end here, the prior high or the previous high. Okay, back up here before the market started retracing here. This was the previous high right here. Okay, so let's say you missed this opportunity right here where we got the market structure shift. Okay, right here. All right, the market pushes higher. Okay, before it takes out liquidity on the top end, Look what happens. After that market structure shift that it made right there, okay, MSS, market structure shift, it pushed higher, leaving behind what? A demand zone right here. Now we are within this leg to the downside. We are wedging, but because we got a market structure shift at a demand zone, okay, price pushed higher, it created a new area of demand right here. All right. Now, when price pushed up here and pulled back and broke higher, there was an area of demand resting right here as well, as you can see that there. Okay. But we also have this demand zone here. As I showed right here, we had a demand zone here and then one below it. I would prefer to take the demand zone at the lower extremity of a leg. Say this push to the upside right here, because we had one here and one here. This is probably going to be your better point of, area or zone to look for to take a trade, because it is an area where the leg started pushing to the upside, where we got this market structure shift and then the market started pushing higher. This right here will be the midpoint. Even though we got a demand zone right here, will be the midpoint of this leg right here to the upside. So I want to take it at the lower extremity. This zone right here made more sense. Again, we got the market structure shift, pushes up, retraces, could have got in here at the close of the candle, pushed higher, wait for the pullback to the lowest, I say demand zone, the lowest point of where there's a demand zone resting at. All right, aggressive buying, demand zone right here, pulls back. Then all we're waiting for at this point here is to do what? Now, again, we have this high right here. All right, price was already rejecting a demand zone right here. We're still aiming to take out 44.18.5. Comes back, boom, what does it do? It sets us up for another market structure shift. We didn't get a full break to the upside or close of a candle to the upside immediately, but it comes back to this zone right here, pushes up, pulls back, breaks higher. Now we got another market structure shift. It pulls back, okay? So at the close or the break of the candle in the opposite direction again, go long and aim for the high right here, 44.18.5. It does exactly that. Again, another market structure shift. Boom, breaks higher, pulls back, close of the candle in the opposite direction, gives us the, or lets us know that the market is bullish still. Go long. So if you got in here, I'd probably get in here at 44.09.25. But if you wait for the full break of the candle, breaking above 44.10.25, right here would be your entry point at 44.11.75, and you can take it back up to here to 44.18. Okay, beautiful trade setup. Again, market structure shift back at the demand zone. Okay. Another thing I want to point out, I mentioned this earlier in the video. Remember when I said when price came back to the zone right here, it tested the midpoint of the demand zone here. Okay. All right. So take a look. It closed within the zone, right? And remember what I said, most times when it closes in a zone, it makes me a little bit iffy at that point there. I'm not saying that it still will not work out, but you have to be very mindful, okay? So I would have waited for the market structure shift to really give me more confluence, and which it did right here, okay? Now, take a look when it pulled back to this zone right here. It pulls back to the zone, but did price close within the zone? No, it came within the zone, it wicked out, boom, market structure shift, pull back, or wait for the close of a candle, a break of a candle in the opposite direction, take a long entry, or wait for the market structure shift, pull back, go long. Okay, so when you see opportunities where price pulls back to a demand zone or a supply zone, in this case here we're looking at demand opportunity, and price does not close within the zone, and then you get a bullish candle in the opposite direction, which means a bullish candle that closes to the upside where price wicked out at the zone, you can look for an opportunity to go long. Okay, if you're more conservative and want to wait for that market structure shift and then a pullback, which is a second opportunity, then wait for that. That's going to give you even more confirmation. I just want to point out and give you guys these pointers. All right, and this works out in most instances. Okay, and this is how I was able to really start to build an account, really start to make profit, and watch my capital grow to where I was able to get out and leave my current or leave the job behind. All right. And lots of you individuals out there may be in a position, like I said, that where you just hate your job or you're burnt out and you're ready to start a new career venture and have a change in life. This is an opportunity. I don't know what you're waiting for. It's a great opportunity. Trading is one of the most lucrative things to me in life that you can actually be successful with, make money from. You don't have to do it all day long, just an hour or two a day, and make as much as the salaries of a doctor or a lawyer, you know, in just a short period of time. You can become very successful, you know, become very wealthy if you just take the time to understand and learn how to trade correctly. You know, trading is an art. There's no science to it. I'll say it like that, to where, you know, where it's like red light, green light. No, you have to feel your way through the market and understand what's going on in the grand scheme of things, okay? But I wanted to show you, you know, how powerful supply and demand is and how to use the strategy that I use correctly, what to look for. And if you apply and follow the rules correctly, you will make money. Now, I'm not telling you that every trade is going to work out, but that's where you need to practice proper risk management on the daily, okay? Know when to get out when the market is coming back against you to protect your capital. Guys, that's all I wanted to share with you today and show you, okay? And take it for whatever and how you want to take it, you know, but the information I'm providing is definitely valuable. You can apply it to your own trading. And I want to see you guys become successful. I'm not trying to BS anyone. You know, if you just follow the strategy, you follow the procedure, the systematic way. I'm not saying you have to do exactly like me, but there are traders on our Discord community that have picked up and understand and grasp supply and demand and how I trade it, and they're doing very well. If you don't believe me, come over to the Discord. Find the link down in the description portion of the video. Lots of them have learned or picked up things from also becoming an elite member. You may be asking, how much is that? You know, I know lots of people are out there that trade crazy amounts of money for courses and things like that. I'm not a mentor, but for $6.99 a month, basically, like I said, a price of a cup of coffee that most of you spend on a daily, we're talking $6.99 a month. You can watch my trade breakdowns. You can watch where I go through it and as if you're sitting right next to me. You know, I explain in detail my thought process behind my trades when I post those videos. You know, it's like an elementary way of walking you through, hand holding you, and showing you how to do it yourself. Okay? So the trade breakdowns, you also get the video playlist that I put together a list of videos. So you don't have to watch all 500 videos here on the channel. I picked out the ones that I really believe and feel that paint the picture of how I actually use a strategy, you know, in my own trading plan. Okay? So anyways, that's up to you. Again, if you want to become an elite member, find the join button here on this video or on any video. The join button, click on it and select the elite membership. Again, it's one of the YouTube tiers through YouTube, but it's just basically you're just supporting a content creator, supporting me and my efforts, providing all this valuable information basically for free. So it's just your kickback and showing me that you're thankful for me making these videos, okay, and providing content that will allow you or most traders out there who are new and want to learn supply and demand and the strategy of how I trade so that they can become as profitable as well. I appreciate everyone who's watching. Appreciate everyone who finds the content valuable. I appreciate everyone who's dropping likes on the videos. I appreciate everyone who's currently subscribed. And if you're not a subscriber, please, what are you waiting for? Take the time to become a subscriber by clicking on the red subscribe button. Click on the bell next to it. Turn on all your post notifications so you never miss one of the uploads. And don't forget to join our Discord community by clicking and finding the link down in the description portion of this video. I'll see you guys in the next one. Have a great weekend.